down 200, nearly 250 points, down just over 0.5%. The S&P was down 0.69%, down almost 45 to close at 64.15 and a half. Nasdaq was down 0.82%. The Nasdaq was down about 1.5% at the lows of the session, just over that level, I believe. And the Russell was down 0.60%. The VIX was up 0.65%. Close at 17. I showed you over the weekend, it got that bullish cross on Friday on the MACD. Now beginning to see that play out. Friday, after the stock market had closed, a federal appeals court ruled that most of President Trump's tariffs are illegal, saying that Trump didn't have the authority to impose tariffs. And the excuse for the sell-off today was that Treasury yields soared on the prospect of the U.S. having to refund the tariff money. Media is now telling us, the tariffs are all but gone now. So the same people that told us that we were going to have the stock market crash because of the tariffs, and tried to convince us we were moving into the next Great Depression because of the tariffs, and told us we were going to have hyperinflation because of the tariffs. Everything they told us, the complete opposite has happened. They're going to be wrong on this. This is going to be overthrown. They're going to overturn this decision at the Supreme Court in all likelihood. Even if they don't, there are other acts in the 1930s, with the trade and tariff acts of the 1930s, 60s, and 70s. And the International Energy Economic Powers Act of 1977 gives the executive branch the powers to do this. President Biden did it. Trump imposed the tariffs in 2018, 19 on China. President Biden raised those tariffs during his administration. Both Trump and Biden have done this. Executive branch clearly has the power to do this. This decision is going to be overturned. But that's the reason for the sell-off today, which caused yields to spike. The 10-year yield jumping up at 1.18%. Again, we've had the 50 cross below the 200. You got a bullish falling wedge developing here. Again, eventually, I think the 10-year will eventually rise back up and break this trend line right here and try to clear the resistance zone. And when that happens, I think you'll get Jamie Dimon's crack in the bond market. We'll eventually see an inflation freak out as inflation rises back up. If Supreme Court ends up ruling that the tariffs are legal, what does the market do with that? But as I've said, I eventually think we end up going higher. You see the bond market collapse, and again, I think in the coming months ahead, I think that will end up being one of the catalysts. That's an inflation freak out. The other one, I think we'll see the inflation indexes like the CPI begin to tick back up, the PCE inflation index. I think CPI is going back to 9%, but I think it's going to rise back up just like it did in 2007 and 8. It still did jumbo cuts. They were worried about inflation back then just like they are now. Now they're worried about the weakness in the labor market. We're going to get the jobs report this Friday. What happens if we get a strong number? What happens if those revisions downward end up getting revised back up? So we'll be watching. Last time I looked, there was still a 91% chance, even with today's rise with yields, there's still 91% chance. Earlier today, I haven't looked at it in a few hours, but earlier today it was about 91% chance that the Fed still does a rate cut that's based on the betting markets. If inflation ticks back up, even if the economic data, which we saw the GDP already rise back up, again better than expected, even if we see the labor market recover, it could just do one cut. If, in fact, Powell is caving to Trump, and again, he's under a lot of pressure, who knows? My guess was that we're not going to see the Fed end up cutting rates until they panic, but now Powell is making this kind of half-hearted commitment to cutting rates at Jackson Hole. So, do we get one and done, and then the Fed goes back to their wait-and-see mode? It could happen that way. It's a different set of circumstances with Powell being put under all this pressure. So we'll see what happens with that. But again, I expect this to eventually get a breakout above this trend line and move back above the resistance zone. It'll move to new all-time highs. I think Jamie Dimon is going to be absolutely 100% correct, because I'm predicting the same thing about the collapse with bonds and the spike with yields. Go back up to try to fill some gaps. Nvidia got a hollow red candlestick just under the 50-period moving average. It took out the previous low. Again, we were told this wasn't going to happen. I told you that Nvidia was likely going to peak surrounding the earnings, ended up getting a long-legged doji, got confirmed, and now we get a follow-through. We got the confirmation below the long-legged doji. We got the confirmation here, the follow-through here below the confirmation bar. This is now a confirmed reversal with bearish reversal of conditions that we got on Friday. I told you the market would likely follow suit. We saw the Nasdaq follow suit. S&P tried to get the bearish reversal conditions and fell short of that. We got the 10 below the 20, and I told you that's why this rally was going to fail. We went back up, and we got a slightly lower high by about a penny below that level, and you have what you had with Bitcoin. You got a little miniature double top. We still have that larger broadening formation with the Nasdaq and with the Nvidia daily chart. Nvidia down nearly 2% today. We were down lower, but we got a spinning top candle of indecision, either a continuation or a reversal. If we get a rebound back up, you can go back up and try to fill the gap and move towards the 10-period moving average. I told you when Nvidia breaks this trend line, again, you're going to the correction on the Nasdaq. S&P went slightly higher, going sideways. Nasdaq did not. Nvidia peaked back over here in mid-August, or early August, I should say, and so did the Nasdaq. It peaked August 13th. And again, we now have a lower high, lower low. It's not on a closing basis yet, though. We'll see if we get that. But I told you that when that trend line breaks, you're going to see a pullback towards the 200-period moving average that will give us a correction of the market. That has happened with the Nasdaq. We saw the Nasdaq put in a peak on July 31st. It began to sell off, but there was no follow through. There was confirmation, but no follow through to that reversal bar. We went back up. We went 1.5% higher, slammed into the resistance again. Got a black candlestick not seen on this chart, and then we peaked on August 31st, 1.5% higher than the July 31st peak. Sold off, rebounded back up to the 61.8 Fibonacci. We sold off 4.28%, rebounded back up to the 78.6 Fibonacci, pardon me. The Powell rally here, giving back much of it. We closed just at the low end of that level there. Bitcoin already gave it back. I told you the market was going to soon follow suit and have a lower high, lower low once we break this level right here from our August 20th low there. The Nasdaq also giving the illusion, the rallies keep continuing to go as we've had a rally up, a move down, a rally 1.5% higher, back up, and then here. And again, you also have a potential head and shoulders topping pattern on the Nasdaq. But because the sell-off is taking its time, the S&P is moved slightly higher than the Nasdaq, giving the illusion that this rally is where, we've had this massive rally of the July peak. And again, Nasdaq only moved 1.5% higher from it, S&P around 2%, and Nasdaq's already topped. So has Nvidia. Bitcoin peaked at that same time as the Nasdaq. Bitcoin's already sold off 14%. It's trying to rebound after a significant drop. We'll likely see a much bigger sell-off towards the 200-period moving average with the Nasdaq, likely going down lower with Bitcoin. My signals all begin to turn back to bullish. Bitcoin, Nasdaq, and S&P are about to play catch-up. Positive correlation in Bitcoin often leads. Nasdaq getting rejection at the 78.6 Fibonacci of the entire decline, and now resuming the decline with Friday's sell-off and our gap lower today. Again, we'll see. Do we attempt to fill the gap? You've got a couple of gaps now. You want to watch a gap. Is it a gap and go, a gap and fill, or a gap and trap? Or do we fill these gaps at a later date from our close here and our close here? We have a couple of gaps to be watching. These may be filled after the sell-off is done, but it's possible this one we attempt to fill that, the gap from today, sooner rather than later. We'll be watching. Trend lines in the weekly time frame. This is the one from the 2023 low with our linear scaling. We went right up to it, slammed up into it in July, slammed up into it July 31st, August 15th, and we came to just underneath it, got a failed breakout. You've got a 3 drives to a high. Again, going sideways, drifting ever so slightly higher, and we have this red trend line from our recent lows that we're now breaking. Close pretty much right on that trend line. If we try to fill the gap, we can get back above it, but we did close pretty much right on that trend line. This is from the May low, from the June low, and then our August 1st low, and then our our low there, August 20th, right ahead of the Powell rally. The Powell rally, most of it's now been given back. We had a rally. We came up here, we didn't reach that trend line, and we had a failed breakout, and we got a 3 drives to a high, and we're now coming back down, and we gapped lower below that trend line to rally back up. You got a possible hammer candlestick if we try to go back and fill the gap and get above this trend line. But Nasdaq, it's a bearish reversal of conditions. Could the S&P join it in the next day or two, at some point this week? And then we'll be watching what happens with the jobs report. Jobs report, we're likely going to sell off with it no matter what. If it's weak, oh, that's terrible. The economy's weakening, inflation's rising. Stagflation. And we'll have the Fed cutting for the wrong reasons, which they're going to cut for the wrong reasons anyways. Herd wants to believe, oh, it's because the economy's so good. Even if the report's bad, the market should sell off. If the report's good, there's no reason for the Fed to cut. Inflation's ticking back up as I predicted it would. If the labor market recovers, GDP came in better than expected, then what reason is there to cut? Again, Powell throws a bone to Trump and the market. Get one and done if he's caving, but you're not going to get major cuts until the Fed panics, and I think we go make new highs after this sell-off, and then I think you'll see the Fed panic. I'm thinking that because the Fed is always late, I think that if you see a peak in November, December, October, November, December in the market in Bitcoin, markets begin to crash. January, the Fed should begin to panic, and it's funny. They panicked back in 2001 in January. That's when they did the jumbo cuts, began the jumbo cuts, and in 2008, in January of 2008, the Fed panicked. You're probably going to see it happen January 2026. I wouldn't be surprised. That's what I think is likely going to be the case. It's usually late. We may get, and this is an unusual set of circumstances with Powell here, a lot of pressure. So again, before, if everything comes in better, then why would the Fed cut unless Powell is, caving and just a cut to get Trump off his back? Trump wants 300 basis points. Powell's likely, if he does one, it's likely it can only be a quarter. But the Fed still cut anyways, could be, to just wait and see what happens. But right here, we're taking out this trend line. We closed right on it. And again, this was key support. So this is resistance. Do we get rejection or do we have a hammer? It takes us back up to now attempt to fill today's gap lower. Important trend line to be watching. Didn't make it up to this one or this one over here. And we had a failed breakout. And that got confirmed. And now we get the follow through. S&P had a peak with the divergence in our 15-minute time frame, intraday charts. We turned down. We formed on Friday. We dropped down. We formed a bear flag here. Here's the flagpole. Here's the flag. And then we dropped down, gapping lower today. We'll be watching to see, did we fill that gap? If we do, it's right there at the 200 period moving average here on the 15-minute chart. If it's a gap and go, then we gap down. We don't fill the gap, and we just keep going, and we move to take out this low over here from August 20th. So again, we'll be watching that. You have a 3 drives to a high pattern in the daily time frame. Turning off these trend lines in the weekly time frame. Here's the one from the 2023 low that we looked at on the daily chart from our 2023 low. We're turning off of that level. A topping tail. I showed you the weekly charts up close. We got a topping tail at that level, and now we're turning down. So I expect this week is going to be lower. Straddled along that trend line for a while. I use this trend line to call the bottom right here, this trend line as key support, and we hit this trend line right here from the 2020 low, and that marked your bottom. And this trend line would likely give us a top, ended up forming a 3 drives to a high pattern, continuing to slam into that trend line of resistance. We're likely pulling back towards the 20 or the 50-week moving average, and then eventually I think you're coming up here to 6,700, maybe higher, maybe 6,800. I think you're going to come up and hit these trend lines, and I think that's where the top is, and you complete the final phase of the blow-off top. This is our linear scaling. Log scaling, we overthrew the trend line from the January high, and again, turned down. We got that little topping tail in the weekly time frame. You have a little negative divergence here, and again, we're likely going to get a pullback and then come up to these other trend lines that I've talked about and go towards 67 or 6,800 or something like that, and then peak. Remain longer-term bullish. I think we get a pullback, but again, we're straddling around these trend lines and now get a pullback just like we did over here. And again, has lulled the herd into a false sense of security. Same people that told us down here at the bottom, no way we're going to rally back up, no way we're going to not crash. Now they're saying there's no way we're going to sell off and there's no way we're going down. But the rally that we had last week, the Powell rally right here, we gave most of that back at the lows of the session. We gave all of it back at the lows of the session, but then we get this hammer, got a hollow red candlestick. So maybe you fill that gap. You go back up to the 10 and try to fill the gap here. Certainly possible, but we're still seeing a confirmed and a follow through to this failed breakout. The July peak was here. We moved 0.85% above that high, and then we went a little bit higher for one day. And that took us about 2% higher above the July peak. This illusion that the rally is continuing when, again, we were going sideways, slightly drifting higher. Nasdaq couldn't make a new high, and it diverged with the S&P 500. Got a peak here in July. On August 15th, we got a peak, and we moved one bar above that high, and it failed, and now it's a confirmed reversal in that it completed a 3 drive still high. We got to get a reversal conditions to validate that. We'll be watching the gap. We could fill the gap, but again, probably by the end of the week with the jobs report, we'll have sold off back to the 50-period moving average or beyond it. The reversal signals that we're getting. Nasdaq, few with the S&P. We've dropped below the 10 and 20. Again, we're likely going to see the 10 and 20 get the bearish cross. We've already got it with the Nasdaq. We've already got it. Nasdaq dropping back down to the 50-period moving average with a lower high. S&P moved slightly higher. Nasdaq did not, and they diverged, and that's what often happens at tops. You've got this divergence going on, up forming a triple negative divergence, just a fraction above the August 15th high. Act like, oh, we've moved 33, 35, 34% higher than off of this. It creates the illusion that this rally is just continuing at a rapid pace when it's not. Gave us a 3 drives to a high reversal pattern. The negative divergence on the stochastic, it already rolled over. Sell-off late last week, and first cross that we had, CD turned back down. There from the signal line down back below it, there's multiple point diversions. We got back-to-back reversal bars on the weekly time frame. We got the hanging man candlestick on the S&P weekly, followed by the doji, all slamming into resistance. Watching to see if that candle's confirmed by the end of the week. We're likely going to confirm that candle. We had that topping tail back there on August 13th. We've got the hanging man over 2 weeks ago. Then we got the topping tail, the gravestone doji. Well, again, we'll be looking to see if that gravestone doji is confirmed. Again, Nasdaq making the lower high, S&P making the higher high, but both turning down off of key resistance the weekly time frame. As the S&P formed a 3 drives to a high, it is likely completed. The confirmed reversal today, we had another trend line. We broke down from our original rising wedge from July. Again, trend lines change all the time. We formed another one here, still breaking down from the larger rising wedge here, and then back tested it, went slightly higher, and now we're turning down with a confirmed breakout, a confirmed failed breakout from last Thursday. We've got this triple negative divergence, and again, likely have completed primary wave 3, going to get primary wave 4. Again, might find it right here at the previous high. We might just come back right here to this peak over here in February. That might be where we bottom out, or maybe we get closer towards the 200 or 100 period moving average. Likely we're going to take out the 50, but the cloud is right in here as well. So again, we'll be watching. Then I think, again, it's off to the races towards 6,700, even higher. It could go even to 6,800, depending on when we hit those trend lines. We formed a 3 drives to a high pattern. We'll be watching to see if now our failed breakout is confirmed, gives us a bearish reversal of conditions. We join the Nasdaq. Same thing for Nasdaq. Does it go back and fill the gaps? We got a gap from Friday. We got a gap from today. Looking for a push down below this low from the 20th that we made on the S&P and Nasdaq. Once this trend is done, we've already had the bearish reversal of conditions in the daily time frame. I expect we're going to see it with the S&P. Also getting a hollow red candlestick at the 50-period moving average. So again, we might try to fill these gaps. Nasdaq 100 is down 0.79%, down 184 points. Nasdaq already peaked on August 13th. It sold off 4.28% at the lower high. Now we're going to the 50 period. We're likely going back to the 100 or 200 period moving average and the cloud here. Maybe, again, these previous highs become the higher low. Maybe that's where we move to. Diversions play out, and again, now we have the bearish reversal of conditions. We have the MACD still bearish, and we've got the stochastic rolling back over. We have gaps to be watching to see if they are filled or not. If S&P gets a bearish reversal of conditions with momentum, we should see trend signals begin to turn. Some of them tried to turn today, had a rally towards the end of the day, so we'll be watching our gap. Nasdaq was mixed, but it rallied back up. Some signals turned back to bullish. We got that bullish reversal of conditions. Other signals remained bearish. Now Nasdaq signals are turning back to bearish with this sell-off and gap lower. Here's one that remained bearish through the entire rally, back up for the lower high. Same is true here for the Nasdaq. Again, signals remain bearish with the lower high. Signals turn back to bearish today with the sell-off, like that bearish reversal of conditions. S&P dodged the bearish reversal of conditions and prevented some of the signals turning bearish near the lows of the sell-off. Signals before the weekends will likely be bearish, joining the Nasdaq. Signals were bearish on many trend signals, the lows of the session, but prevented it, or really well off the lows of the sessions, but we closed strong, and that prevented it from happening. Signals were bearish for much of the session. It will likely join Nasdaq later this week, and again, maybe we fill the gap here, but the signal here was bearish on an intraday basis for most of the session, but didn't close that way. So again, we'll be watching if we join Nasdaq and get bearish signals on the S&P by the end of the week. Short trading week. Told you that Nvidia got that bearish reversal of conditions there on Friday, firming the long leg doji, and now we get confirmation and the follow through to down here at the 50 period moving average. We dipped under it and we closed just right there at it. If the gap fills, but you got a bearish reversal of conditions. You had the red awesome oscillator bar. Now Nasdaq joins it. S&P tried to got the red awesome oscillator bar on the S&P. S&P tried to get a bearish reversal of conditions. Was just above the lower boundary of the cloud, preventing that from happening. It'll likely join the Nasdaq and Nvidia later this week. Nvidia daily chart here. Weekly Nvidia losing the 10, just like the Nasdaq, getting the red bar, all following Bitcoin, which has done the same thing. You're likely going to see Nvidia eventually make a divergence and go to new highs, probably at some point peak in October, November, December, and I'm leaning towards November or December for Bitcoin and for the Nasdaq. Peak and peak at that same time or diverge with Nasdaq, and I'm betting we get emergency cuts from the Fed by January, as we've done in the past. Nvidia weekly chart here. A double top like Bitcoin, doing exactly what Bitcoin did. Bearish reversal of conditions. Here's the Nasdaq. We've got a red awesome oscillator bar. We've got confirmation of a lower high here. We're now switching back to a bearish reversal of conditions. We've peaked back on August 13th, about 3 weeks ago. You got signals that tried to turn back to bullish a couple of days and then reverted right back to bearish. We're now coming back to this low right here. And again, you take it out, you have your lower high and your lower low, and we're likely headed back towards the 200 period moving average. Maybe we don't reach it, but we're probably headed towards it. Maybe we hit it, and it's at 21,316. 316. Yep, that's correct. We had the divergence on the Nasdaq. This divergence over here gave us this sell-off in July. We had this divergence, another reference point, and that gave us the top back on August 13th. P moved slightly higher, but a failed breakout, as I talked about over the weekend. If we look at the weekly chart, we're dropping below the 10-week moving average. We're playing catch-up to Bitcoin. Bitcoin already dropped nearly 14%. It's rebounding right now, or at least last time I looked at it. Bullish divergence is after nearly a 14% sell, but the market's going to play catch-up to Bitcoin, get a pullback towards these 20-week moving averages, towards the 200 in the daily. You've got a red awesome oscillator bar. I think you're going to see red bars, and then I think you're going to turn back up, and you're going to get your diversions here in the most recent price action. I'm looking for the same thing to happen with Bitcoin. You got a divergence over here, and it gave you this 21 plus percent sell, or I'm sorry, it was more than that on Nasdaq. I think it was what, 25%? S&P dropped 21%. This is Nasdaq, but again, I think you're going to see a divergence end up setting up into October, November, or December, and I think Bitcoin will top. Historically, Bitcoin, which has a positive correlation with the market, has topped in the past in either November or December. Nasdaq can top like it did at the same time as Bitcoin, the S&P. But like right now, we saw Nasdaq make a lower high, S&P move slightly higher, gave the illusion that, oh, where this massive rally's happening when the S&P was going sideways, Nasdaq was going sideways, it got a lower high. Now it's getting a sell-off that can give us a lower low. They diverge, they often do, but this is telling us, just like Bitcoin got this in the weekly time frame, this is telling us we're likely going to see more selling over the next few weeks, and then we'll probably see a divergence going into the coming months ahead. We're dropping below the 10-week moving average. Got to get a bearish reversal of conditions. We didn't close below the cloud, so you don't have it here yet in the weekly time frame like we did back over here on the Nasdaq. S&P, we're not below the 10-week moving average, but we're testing it. We've lost the 10 period in the daily time frame. And again, we're getting a red bar to start off the weekly chart here. Again, this divergence right here, it gave us this 21%, 21 plus percent sell-off there, it's over 21%. And again, this is likely going to give us a pullback towards the 20, maybe a bigger one towards the 50, but we're likely going to get this pullback and then go get one final climax high. In the final phase of the blow-off top, and I think we're going to get the final climax rally after this next sell-off, which we've gone sideways for weeks, and so people, oh, it hasn't happened yet, so it's not going to happen. Nasdaq made a lower high. S&P drifted slightly higher, but it's still been going sideways, drifting ever so slightly higher. It's only risen by 2% above the July peak, after rallying about, 35% now in totality with last week's high. Red bars in the weekly time frame, doing exactly what Bitcoin's doing in the weekly time frame. In the daily time frame, we didn't get the bearish reversal conditions. At the very end of the session, we closed just above the cloud there. The final rally towards the latter portion of this session. Still try to fill the gap, but we've dropped below the 10 and the 20 period moving average. We've got a red bar. You had the divergence over here, give us a July sell-off. And then we had divergence, give us the August sell-off right here, and 2.20%. And then we rallied back up slightly above that when we got a false breakout. And that's given us a 3 drives to a high pattern, and that's given us another reference point for a divergence. S&P was down more than 1% at the lows of the session. It ended down 0.69%, down almost 45 points lower. We weren't able to close below the cloud, but we did close below the 10 and 20 period moving average after trying to rest on them there on the Friday session. We began to sell off on Friday. Everybody was distracted with Labor Day weekend, coming back from vacation. And right now, again, getting back to work, getting back to school. People are distracted. Quietly putting in this 3 drives to a high there on Friday, and it's now beginning to play out. We'll see if we get the bearish reversal of conditions tomorrow. But underneath the cloud and near all the lows the day we did have it, we just closed right back at the lower end of that cloud, preventing the bearish reversal of conditions. So the cloud is still green. We'll be watching the gap to see if it attempts to fill. We have a gap and go, a gap and fill, or a gap and trap.